Here are the crypto top headlines covered in this video. VanEck CEO interview. Bitcoin is the obvious asset that's growing up in front of our eyes. Next, U.S. SEC denies Coinbase's push for crypto regulations as unwarranted, and Coinbase's chief legal officer's response. Also, Ripple issues white paper on CBDCs, reiterates belief in their potential. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions. Just bringing crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline is an interview from December 15th on CNBC with VanEck CEO saying Bitcoin is the obvious asset that's growing up in front of our eyes.
It's not just Apple who's betting big on India lately. The iShares India 50 ETF is up 8% in the past month and 16% this year as investors seek alternatives to China in its growing market. Meanwhile, Bitcoin is hovering near the 42,000 mark amid speculation the SEC will soon approve exchange-traded spot Bitcoin funds. And for its part, it's up 150% this year. Both of these are my next guests' screaming buys for 2024. Joining me now for more is Jan VanEck. He is the CEO of VanEck. And it's great to see you again. Welcome.
Thanks.
Just take me, we haven't had a chance to touch base about this person. When did you get into Bitcoin? Because this is a really big thing for you and for the fund, for the firm and everything.
Yeah, 2017.
Okay.
So we were the first established ETF player to file for a Bitcoin related ETF.
Your personal interest, or what drove it?
It was me, but listen, gold, my dad started the firm with the first gold fund in the United States. And so store of value investing is in our DNA. And I said, oh man, what's this Bitcoin thing? And I knew about it, and I said, well, you got to do the deep dive. So I listened to the podcasts, read the white paper, and I said, no, this is going to be an accompaniment of gold. And, when I try to talk to people who are so doubtful about Bitcoin, I said, listen, that was in 2017, it was $3,000 a Bitcoin. It's up 10x from now. It's just, why are you surprised? Remember China? Large parts of China were completely undeveloped and unindustrialized 30 years ago, but things change, right? And so I think Bitcoin is the obvious asset that is growing up in front of our eyes.
I guess the two, and I watch it and I concede that it actually has behaved remarkably like gold and some kind of store of value. Proxy, I can't quite put my finger on why, but you do think, well, there could always be some new thing that comes along. Bitcoin itself was innovative. There could be some new version of this down the road that takes people's interest. And number two, the Jamie Dimon critique that there's so much nefarious stuff associated with it that there's still a regulatory risk that, stymies it.
There's a lot of political risk around it, absolutely. But what I say as far as something else coming along, there's 50 million users of Bitcoin, so it's got network effects. I think it's impossible for me to imagine some other, what I call it, internet store of value that's going to get leapfrog Bitcoin. So that's number one. As far as the criminality and all that kind of stuff, listen, I don't throw the first stone if you're associated with the bank or any financial institution that's never been involved with criminals in one shape or another. I'll leave it at that.
Let me steer it back to safer territory. How about this? For 2024 in particular, and some have been scratching their head a little bit at the behavior of Bitcoin and gold because they're saying, are they trading off the real rates? What is it that they are trading off of, and what tells you that you think if this is your gut, that Bitcoin itself will outperform?
Well, it's the macro, right? So you just the stores of value that don't generate interest, which is why the investors like Warren Buffett don't like them at all. But they behave really in relation to interest rates, like you said. That's the big cycle, and interest rates are headed down, directionally speaking. So the macro behind Bitcoin and gold are very strong. By the way, they kind of do perform similarly. They both peaked in 2021. They've both been rallying this year. Obviously, Bitcoin way more than gold for different
But now
reasons.
that Bitcoin's grown up, and I promise I'll move on to other topics, but if you look at gold's performance in the 2010s, it was okay. That was all obviously the low interest rate era. If you think we're going back to kind of low rates, has Bitcoin already made the big gains and now kind of treading water?
No, because it's growing up. Like I said, it's like a child that's growing up. And so you can argue about it being a bubble. And what I say is no bubble. So it bubbled in 2017, but then it hit all-time highs in 2021. So nothing has ever been a bubble that then has outperformed itself. And so I fully expect in this cycle, and you have this halvening thing happening in April, which is great technically for Bitcoin, I expect all-time highs in the next 12 months.
So you guys are amongst those who have filed to have the first or one of many spot Bitcoin ETFs. How do you think they're going to approve it? Literally one at a time, firm by firm, or is it going to be kind of a batch all at once? Your ticker, I have to say to your credit, is HODL.
Yeah, so. We're very happy with the ticker, which we announced last week. But I would very, very much expect it'll be all one day.
Okay.
Because that's what happened with the Ethereum futures. So because the SEC decided to sort of put everything on hold on crypto, just depending on paperwork, effectively, someone could have an unfair advantage. And they've said from a policy perspective, no, let everyone start at the same time.
Our next top headline, U.S. SEC denies Coinbase's push for crypto regulations as unwarranted. The U.S. exchange had formally petitioned the agency to start writing comprehensive crypto rules, but after careful consideration, the SEC said no. Coinbase has waited since 2022 for a response from the Securities and Exchange Commission on its formal petition to request tailored regulations for crypto, even seeking to force an answer through the courts, and the rejection has now arrived. The SEC says there's no reason to craft a new regimen for crypto, and that it's already writing some targeted crypto rules and conducting enforcement actions under existing authorities, though 2 of the 5 commissioners disagreed. Coinbase said it'll take the matter back to court. U.S. crypto exchange Coinbase's petition to the Securities and Exchange Commission to prod it toward a system of tailored rules for digital assets was rejected by the regulator on Friday. The existing securities regimen appropriately governs crypto asset securities, said Chair Gary Gensler in a statement issued with the denial. Besides arguing that the SEC has sufficient authority in today's laws, he said the industry watchdog has already been engaging in rule proposals to directly regulate crypto businesses, and its enforcement division has also been able to address wrongdoing. Gensler made a third argument, too, that it is important to maintain commission discretion in setting its own rulemaking priorities. Coinbase had applied this formal pressure in 2022 before it was itself sued by the SEC as an unregistered securities exchange. Earlier this year, the company had asked a federal court to force a response from the agency, which has now arrived. The Commission disagrees with the petition's assertion that application of existing securities statutes and regulations to crypto asset securities, issuers of those securities, and intermediaries in the trading, settlement, and custody of those securities is unworkable. The 5-member commission concluded in its 2-page response, which said the agency had given the request careful consideration. The Commission concludes that the requested rulemaking is currently unwarranted and denies the petition. Coinbase Chief Legal Officer Paul Grewal said the company will further challenge this rejection in court, calling the SEC's decision an abdication of its duty. No one looking fairly at our industry thinks the law is clear or that there isn't more work to do, Grewal said in a statement. Commissioners Hester Peirce and Mark Uida opposed the SEC's denial. We hope that interested persons continue to posit specific rule changes, guidance, and exemptions that would form a useful basis for the crypto industry to continue its development within the United States, the Republican commissioners argued in a statement. While we are disappointed that the Commission is not hosting these important conversations, we will have an open ear for conversations that others host and the ideas that emerge from those conversations. Grewal said that Coinbase is grateful that 2 commissioners disagreed with the denial and called for a real dialogue. We should be working together to create laws and rules that will benefit consumers and U.S. innovation, not defending lawsuits based on legal positions that change month after month, he said. A footnote in Gensler's statement argues that Coinbase's own petition repeatedly refers to digital asset securities and the SEC's authority over them, thus acknowledging that crypto assets can be offered and sold as securities and subject to oversight by the SEC. Gensler has also noted, without naming Prometheum Inc., that a crypto broker has used a special digital assets registration, suggesting this method of compliance is workable. Seeking a wider industry-specific system of regulations in the U.S. has been the leading priority of crypto lobbyists in Washington. So far, legislative efforts this year in Congress have made progress but failed to reach the finish line. While the SEC pushes back on the need for tailored rules on the securities side, the wider Financial Stability Oversight Council, that includes the agency's chairman as a member, concluded in its annual report yesterday that crypto does need Congress to intervene with regulations. Our next top headline: Ripple issues white paper on CBDCs, reiterates belief in their potential. The white paper states that CBDCs help expand financial inclusion, streamlining cross-border payments, and reinforcing monetary policy control. Ripple has doubled down on its public support for central bank digital currencies, or CBDCs, in a new white paper. The 23-page document was released by the blockchain-based digital payments company on December 14th, and Ripple explains the basics of CBDCs, their attractiveness, risks, and barriers to widespread adoption. The white paper claims CBDCs help expand financial inclusion, streamline cross-border payments, and reinforce monetary policy control. It also states, CBDCs are needed to support the most significant positive impacts of asset tokenization, an increasingly targeted mechanism for transforming tangible assets into digital tokens stored on the blockchain. Among the barriers to adoption, Ripple highlights the absence of a uniform global regulatory framework for CBDCs. Other factors include a lack of end-user adoption, little to no consumer education, fears about privacy and security protections, digital identity verification, lack of interoperability among CBDCs, and offline access to transactions. However, the authors of the white paper believe these issues aren't unsolvable. The company cites its role in developing CBDCs around the globe. Ripple is actively engaged in CBDC collaborations in Bhutan, Palau, Montenegro, Colombia, and Hong Kong, working in partnership with more than 20 global central banks on CBDC initiatives. The white paper concludes that CBDCs have exciting potential, with a predicted $5 trillion circulating throughout the major economies over the next decade. In November, Ripple Vice President James Wallace expressed the same optimism for central bank engagements. Wallace contended that CBDCs provide a cost-effective solution by enabling financial services at a significantly lower cost than traditional methods. He added that CBDCs offer streamlined payment options and chances to establish credit, even without previous ties to financial institutions. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.